Peter Lynch, the legendary investor, recently gave an exclusive interview with CNBC where he discussed the current state of the economy, how we can use tough economic periods to our advantage, and what we should be looking at right now. Lynch is renowned for growing the Magellan Fund from $20 million to $14 billion in 1990, and he shared his insights on the current economic situation by stating that this recession is nothing compared to the past, and that we just have to roll with the punches and stay true to our investing strategy, no matter what the macro environment is throwing at us. He also took a jab at investors who are freaking out over the situation. This interview is a must-watch for anyone looking to invest during tough economic times. In the interview with CNBC, Peter Lynch notes that the current state of the U.S. economy is not that bad, with inflation at 9.1%, interest rates at 5%, and unemployment at just 3.5%. He compares it to the 1980 and 81 recession, where inflation was at 15%, interest rates at 19%, and unemployment over 10%. He advises investors not to panic and to focus on the long term. Lynch emphasizes the importance of investing in companies with solid balance sheets, healthy cash balances, and low debt levels. He suggests looking for new companies and evaluating their balance sheets to make informed investment decisions. To prepare for a downturn, Lynch recommends owning companies with good financial positions, like those with high cash and short-term investment levels and low debt. His advice is to watch the balance sheet like a hawk, and he also describes the types of businesses to be watching right now, including growers or turnarounds. In his book, One Up on Wall Street, Peter talks about the 6 different types of businesses: fast growers, stalwarts, slow growers, cyclicals, turnarounds, and asset plays. It makes sense that in a recession-type environment, where generally everything is struggling, what you really want to keep an eye out for is the fast growers that are doing well enough that even a recession can't hold them down, or, more likely, a turnaround business that was significantly pegged back by the recession but is now starting to see some growth. So, if you're hunting for growers and turnarounds, make sure to check out companies like Target, TJ Maxx, or Wingstop. Remember to look at their balance sheet and assess their growth potential for the next 5 years. And if business gets too terrific, it might be time to sell. With Peter's advice in mind, let's stay focused and keep a level head during these tough economic times. In times of recession, many stocks tend to become oversold due to institutional trading, but even a glimmer of hope can make the stock prices rise significantly. Peter Lynch suggests that a turnaround business or a fast grower company can be a good investment option in such an environment. The period coming out of a recession can also be a beneficial time to invest, as the returns of the S&P 500 in the 12 months after a bear market bottom are usually strong. Lynch advises investors to find their edge, which could be their context in a specific industry or even their everyday life situations, giving them unique insights into specific areas of business that even Wall Street analysts cannot see. However, Lynch warns against investing in companies that one does not understand and suggests investors be careful and look at the company's balance sheet to determine the reasons the stock should be higher. Ultimately, Lynch's optimistic mentality is a reminder that there are always companies that can benefit and do well, and investors must keep a watchful eye for improvement. As we navigate through uncertain times, it's important to remember that we will hear a lot of opinions and viewpoints from various sources, but it's crucial to not act impulsively on these without doing proper due diligence. Legendary investor Peter Lynch stresses the importance of going back to the fundamentals and doing our own research. This means looking at a company's financial statements and constructing our own valuation, forming a thesis, and being able to explain why and how a business will grow in the long term. Peter also emphasizes the importance of knowing what you own. It's not enough to simply buy a stock based on someone's recommendation or because it's been trending upward. Rather, we must be able to explain our investment decision to a 5-year-old in 1 minute. This exercise not only helps us to better understand the business we are investing in, but it also serves as a litmus test for whether or not we truly know what we own. Peter advises us to identify our edge and use it to our advantage. Our everyday life experiences and jobs can give us valuable insights into specific industries and companies, which even Wall Street analysts may not have. By utilizing our unique knowledge and perspective, we can make informed investment decisions. Peter highlights the importance of watching a company's balance sheet during a recession. Businesses with solid balance sheets, healthy cash balances, and low debt levels are better prepared to weather an economic downturn. Moreover, during a recession, it's important to keep an eye out for fast growers that are doing well despite the overall economic climate or turnarounds that have been significantly pegged back by the recession. Ultimately, Peter's advice boils down to staying focused on the long term and doing our own research. By taking the time to understand the businesses we are investing in and identifying our edge, we can make informed investment decisions that will pay off in the long run. Thanks for watching. If you enjoyed this video and found it helpful, please consider subscribing to our channel for more informative content like this. And don't forget to hit the like button to support us and help us reach more people.